He says he is terminating the deal. Elon Musk now backing out of his $44 billion agreement to purchase Twitter. In a filing today, he said the platform was in breach of multiple provisions of its sale of agreement, including his request to share information about fake accounts. Here's what the company's board chair had to say about that. Quote, "The Twitter board is committed to closing the transaction on the price and the terms agreed upon with Mr. Musk and plans to pursue legal action to enforce the merger agreement." So let's discuss and bring in our dear friend David Gura, business correspondent for NPR. David, Elon Musk waived his right to due diligence. He said, let's just get this sucker done. Does he have a case now saying, I didn't have all the information, you deceived me?
So experts say he has a very difficult case to make, and we know that baked into this deal is a $1 billion penalty if either side were to walk away from the deal as was constructed. But safe to say, many thousands of dollars per hour of legal work have gone into constructing this agreement. They're really written carefully, and Twitter seems to be pretty confident that they have a case here to make, that he can't just walk away from this deal. And going back to what Elon Musk has been sort of agitated about or riled up about, are the existence of bots and spam accounts and fake accounts on Twitter. Well, experts will say this is something that Twitter has been frank about, has talked openly about for many years now. It's part of the sort of quarterly earnings reports that they give, sort of what accounts are fake and what are real. So he's been on the lookout for new information here, and it's unclear if he's found anything new. Now, Twitter has cooperated with Elon Musk over the last couple of months since this deal was announced. They gave him access to what's known as the Fire Hose, which is just this incredible massive data, 500 million tweets per day of real-time data that he can go through to look for what's real and what's not. It's unclear how he and his team have done that, Stephanie, but the argument that he's making is a difficult one. He's going to make the argument presumably in court in Delaware, and experts say that there's only been one incident in history where someone has made the kind of argument that he's made, that there's been this kind of material omission and won that case. So it seems like a very difficult hill for Elon Musk to climb.
But here's what he can do. Slow bleed this, be antagonistic in court, and they've got a public company to run. How difficult a place is Twitter in here? Elon could tie them up for ages.
Yeah, he is a very wealthy man, the wealthiest man, as a matter of fact, on Earth. So he has resources to do this, and this has been a concern from early on, since he began taking a stake in Twitter and announced this deal. Like, what are his intentions actually? And so, yes, this could play out in a protracted way in court in Delaware over a very long period of time. And the question is, where does that leave Twitter at the end of all of this? And we've seen the stock price, of course, suffer tremendously since Elon Musk took his first stake. It's down more than 20% now. People have pointed out this is really what Twitter has going for right now, is this takeover deal from Elon Musk. So the company itself, Steph, is just not in great shape right now. We've seen a hiring freeze put in place by the CEO. There's been reports of very low morale within the company as well. So it very well could be worse than a shell of a company as all of this plays out. And again, this could take many months for that process to play out in its entirety.
Okay, how about where's the SEC on all of this? What Elon Musk has done at best is unorthodox. At worst, there could be SEC violations all over the damn place.
So I've done a lot of reporting on this because it really presents kind of an interesting case study in the SEC's efficacy right now. The SEC, of course, has been around since after the Great Depression, and it's designed to patrol and make safe the markets and go after big figures like Elon Musk. But he has accumulated so much wealth. There's just this yawning disparity, Steph, between what kind of fines the SEC could levy against someone like Elon Musk that would make a difference. Is a fine of $100,000, for instance, on filing a late form really going to do anything to change Elon Musk's behavior? And consensus is it isn't. So we know that the SEC has taken an interest in what's happening here. It's like less than a parking ticket. It's pocket lint. It's worse than that. So we know the SEC is interested. We've seen another filing, the SEC asking questions about Elon Musk's approach from the beginning here. It's unclear what they might do or what they will do about this, but it certainly opens him up to scrutiny. And I should say he's someone who's expressed outright and open disdain for the regulator for a long time. Of course, he got into hot water with them when he announced on Twitter a few years back that he'd secured funding to take Tesla private. Turns out that funding hadn't been secured by Elon Musk to do that. So he paid a fine of $20 million. He's settled with the SEC on that front. And in recent months, he's gone to court to try to get that settlement thrown out. A judge said that couldn't happen. So there's a history here. There's an outright dismissiveness of the regulator. That's that presents another problem as well. When you have somebody of the means that Elon Musk has, just sort of flouting the law, flouting norms, flouting sort of the role of regulators, what does that say for how we're protected as investors, as consumers, and how people of his wealth, of his means, are regarded in this economy?
And quickly before we go, you mentioned morale at Twitter is very low. What happened to all those executives who, when Elon Musk announced his intention to buy the company, they had fits, they quit, they were never coming back. They quit, they're not with the company, and now he's not taking it over. What's going to happen to them?
I mean, they're out of luck, and I think so many people here have been put in a really bad position. I want to say one last thing before I go, is this is playing out, yes, in legal filings being sent back and forth, but it's also playing out in a very strange way at this high-level conference that's taking place in rural Idaho right now. Allen & Company, this kind of secretive investment bank, invites all of these billionaire moguls to what's known as summer camp for billionaires. Elon Musk is there, along with a lot of Twitter executives who still have their jobs, including the CEO. There's been a lot of talk about just how awkward that might be. I spoke with a source earlier today who said he's seen both executives not interacting with one another, but they're both on the grounds of this resort. Just about 300 people in total. Elon Musk is supposed to speak tomorrow to this audience. Sam Altman, a venture capitalist, is going to be interviewing him on stage. And so we may learn at that moment, Steph, just sort of get a better sense of what Elon Musk's intentions were here. We started out talking, you and I, just about sort of what they might have been and what condition he might leave this company. And I think the hope is those who are there at this closed-door conference, we'll see if anyone talks afterward, learn anything new from Elon Musk about what he's thinking and how he hopes to proceed here now that this filing's been made.
Yeah, everyone else at that conference is thinking, what the hell? How is this guy allowed to behave the way he does publicly on Twitter all day, every day, when everyone else there knows if they ever did that, they would be in serious hot water. David Gura, thank you so much. I really appreciate you joining us tonight.
Absolutely.
Always great. Flouting norms is an understatement.